What's up guys, my name's Jason. In today's video, I'm going to be reacting to a video of Tasha Keeney from ARK Invest on Tesla stock. You may have heard of him. Maybe you even own the ARK Invest ETF. Who knows? In the video, they go over Tesla's opportunity when it comes to batteries, as well as their price target on Tesla and flying cars. But without further ado, let's just get into the video.
Well, two stocks that have helped drive the recent rally, Apple and Tesla. Both shares have surged since announcing stock splits. Apple shares up about 18% since the end of July, and Tesla up nearly 40% since announcing this stock split. Let's bring in Tasha Keeney. She is an analyst at ARK Invest and covers Tesla there. Tasha, let's talk about what we have seen in the run-up to this stock split. This is taking effect on Monday. As far as we understand, it doesn't change the fundamentals of the company, but it seems like investors just can't get enough of it.
Yeah, well, I think you nailed the point there, is that it doesn't really change the fundamentals of the company or the story. I think from our perspective, a stock split now, especially with fractional shares, shouldn't have that big of an impact. But of course, you could see, some price appreciation from investors basically sort of misunderstanding it, thinking that it might be cheaper.
No. Yes, some people may think that it is cheaper, but a lot of people just don't want to be buying half of a share of Tesla stock or half of a share of any stock, or just owning half of anything. Because when it comes down to it, when people buy something, they want to buy the whole thing. Like, you don't go to a baseball game and order half of a hot dog. So that's why, in my opinion, the stock has ran up so much, because it allows people to buy a full share at a more affordable price than it was trading at before. It's really more of a psychological thing than anything else.
But the long-term story with Tesla, our thesis is still intact. We think it's a leader in electric vehicles, in full autonomy, and we think it's 3 to 4 years ahead of the competition on that front. So from that perspective, our expected value for Tesla by 2024 is still 7,000.
Just to clarify for you guys, this interview was actually before the stock split, so that 7K price target in 2024 is more of like a 1.4K price target for now. But I probably will be putting that 7K price target in the title for a little bit of clickbait.
7,000.
Yes.
I mean, it has the fundamental, that's a pretty high target when you consider where it's trading at right now. You mentioned that there's this fundamental misunderstanding of what a stock is, but we've heard a lot of investors or a lot of analysts who've come on and talked about the potential in the battery day, what could happen moving forward. I mean, is there a fundamental case for Tesla that has changed over the last month that has driven this stock even higher?
Well, I think, I think in general this year, there's been a couple things on Tesla's side. Of course, the earnings report was received well, the possibility of S&P inclusion. But really, I think that during the coronavirus shutdowns, it's become even more clear. So if we just look at the electric vehicle opportunity, if you think of a traditional automaker who is investing in electric vehicles and basically how they're going to handle that when their core business is really sinking, I mean, that just becomes a lot more difficult. And they were already struggling with the technology. It's not their core expertise. They have to build an entirely new car. If you want to copy Tesla, that means building it from the ground up. That just becomes 10 times harder in a time like now.
Tasha's right on the money here. And the funny thing is that these analysts somehow expect all these legacy automakers to catch up to Tesla. Keep in mind that these automakers are going to have to go through the same type of cash burn that Tesla did just to try and compete with them. And you can't beat someone who's already ahead of you and moving faster than you at the same time. So in the end, it'll just lead to the end of companies like Ford and GM. And this is something that could happen sooner than you'd all expect.
So I really feel like Tesla's leadership in the field is solidified. And then, of course, on the autonomous front, we still see Tesla has much more scale than any other automaker, than any startup, because it's using its customer fleet to collect data. So that's still ongoing. So, I think more so now than ever, it's sort of as an innovator, because Tesla's so far ahead, it now has that sustained lead.
There's certainly a lot of excitement riding on Battery Day later in September. What specifically are you expecting on that front?
Yeah, so my partner analyst, Sam Course, has done a lot of great work on the batteries for Tesla. So one thing that we're currently excited about is there was some teasing of basically an improvement in energy density that would make it so that batteries would allow for electric jets. So Elon Musk has talked about supersonic electric jets before, but said that the energy density wasn't there. Now he's saying that could happen in the next 3 to 4 years. What that means is that could be an incremental improvement for electric vehicles, but where it really makes the difference is for vehicles that fly. So this could enable things like electric air taxis. So actually, according to Sam's work, an electric eVTOL, vertical takeoff and landing vehicle, could actually transport you, for instance, in New York, from downtown to the airport for the price of a taxi today.
Nice.
To all bearish analysts on Tesla, you're probably not watching this, but is a man with these type of goals a man that you think is smart betting against, or are you just rapidly losing brain cells every time you talk about Tesla?
So this could be, very disruptive, very quick. You could basically fly over traffic. And we think, this could be a fully autonomous operation. And I think it's, it sounds like a very far out there idea. But the fact is we're actually approaching that point today because of these chemistry improvements.
So what you're saying is essentially we're not likely to, it's not about just the shift of Tesla going from a manufacturer to supplier with its battery technology, but being able to expand where they supply the batteries in place.
Yes, well, it could exactly. It could sort of open up opportunities for batteries across vehicle form factors. So we think batteries are sort of this innovative platform. One of the reasons we're so concentrated on them at ARC is because they enable disruption across a lot of fields. Electric vehicles is a huge opportunity, but it also enables things like drones. So this could be, in this case, the larger form factor drone that transports people or cargo. But you could also have drones that, of course, transport smaller packages. So again, this seems like a far out there reality, but it's here, it's now, and the technology is ready.
And Tasha, when you talk about the kind of levels you're expecting for the stock, upwards of $7,000, is the battery technology really going to be the catalyst to get it there? I mean, it's interesting. We've been talking so much about what has been working for Tesla, and the cars, the auto element of it almost seems sort of like an afterthought, given the potential you're seeing in its expanding business in other areas.
Yeah, I'm glad you asked that question because the expected value includes our assumptions for the core EV business, but also Tesla's position in enabling a fully autonomous taxi network. And actually one thing in our research that has changed over the past year, so Tesla's talked about launching this Uber-like autonomous service. On the last earnings call, Elon Musk said that he's basically at this point where he can drive from his house to work with almost no interventions. He thinks they're very close to solving for full autonomy. With our most recent research, so let's say Tesla launches a ride-hailing network with human drivers. They basically have to do this to learn the ins and outs of ride-hailing anyway, and to seed the autonomous network, sort of that create the bones of it. But this is also an interesting business opportunity for them because Tesla's costs on a per mile basis to drive a Tesla, it's actually cheaper than the average vehicle on the road or than the average ride-hailing vehicle. So what that means is Tesla could take a higher cut than Uber and Lyft off of revenues. It could actually pay its drivers more. It could offer, vertically integrated insurance offerings because it's much more vertically integrated than the ride-hailing networks. And it could be a really interesting time to launch that right now with a coronavirus epidemic because basically, there are these gig workers that are looking for work. There are customers that don't want to take public transportation, and Uber and Lyft are really hurting.
Again, Tasha didn't miss a beat. This is why she gets paid the big bucks. The main thing that should be taken from what she just said right there is that it'd be perfect for Tesla to start rolling out their autonomous taxi network either now or in the very near future. Uber and Lyft have been having trouble in California, and California is one of the biggest, if not the biggest markets for Uber and Lyft. So if they can offer more affordable rides than Uber and Lyft while at the same time taking Uber and Lyft's contractors, I say do it. I say that Tesla take advantage of that weakness because this might be the best time to start doing that.
So I think this could be a big opportunity for Tesla, and it actually sort of de-risks that autonomous thesis because if you think autonomous technology is crazy and it's never going to happen, well, okay, they can launch this ride-hailing network, and that that actually gives them this software as a service like margin business model, this recurring revenue, without solving for that big technological leap. And if you do believe in autonomy, it also gives them the data to then feed that autonomous network and make it better.
Tasha, it's fascinating to look at all the parts that way. Let me ask you really quickly though about what you see in the Chinese EV market. We had XPeng, which is seen as a competitor to Tesla, come to market this week. We've also seen a huge run up in the stock for NIO, also a competitor, although that stock is down more than 6% today. Is that the case for growth in China still intact? And in fact, are we seeing it gain momentum now?
Yeah, so the Chinese market it's the most important auto market, and for electric vehicles, our forecast is 37 million EVs sold in 2024. China should be roughly a third of that. And actually, for autonomous taxis, we think the market value should be worth in the trillions at that point, around 4 to 5 trillion. And again, China could be a third of that. So it's a really, it's basically the most important market in both cases. And the electric vehicle market specifically, competition is very high. There's over 150 electric vehicle manufacturers in China. And it's a very unique market where the government has a lot of say in who wins. So that said, looking at startups like this, we don't think that a company like Tesla is going to be the only player in the Chinese, certainly in the Chinese electric vehicle market, but also in the global electric vehicle market. I think it's really important to sort of see and watch how these companies get to scale. One important thing to look at for both of them is how much they're insourcing versus outsourcing. Again, because that vertical integration has been a really key advantage of Tesla's. It's very important when you're building a software platform on top of the car, and it's also of course, very important for an autonomous network as well. But you also get the full advantage of your battery system, again, if you're sort of vertically integrated. So I think, that both of those players are outsourcing some parts. So I think sort of watching that story and seeing what the end product will be, how much will they insource versus outsource, is an important thing to look at.
Well, that wraps it up for this video. If you made it this far, thank you so much for watching. And also, please don't forget to hit that like and subscribe button. It means a lot. Also, don't forget to comment down below your thoughts on the interview. I'd actually really like to know. But with that being said, I'll see you guys in the next one. Peace. Bye.